Inside the MBA, your bi-weekly window into what's happening at the MBA.
Hi, I'm Rob Van Raphorst. Welcome to MBA Now. The economy remains one of the most important issues on everyone's mind. We all want to know, is it still moving in the right direction, or has it started to slow down? And with mortgage rates dropping, will purchase origination start to pick up at a stronger pace? With the first half of 2019 coming to an end, now is a good time to check in with what's happened so far. With us to discuss it all is MBA's chief economist, Mike Fratantoni. Mike, thanks for being here.
Hey Rob, how you doing?
Good. I know you just put out a new economic forecast, but let's go back a little bit. How have the first and second quarters played out?
So first quarter this year we saw very strong growth, above 3%, but it really was driven by some factors that weren't going to persist over time. So certainly expect that number is going to come down closer to about 2% in the second quarter. That said, job growth for the first 6 months of the year, averaging more than 170,000 per month, really very strong. The unemployment rate at 3.7%.
So going forward, what are you seeing?
Honestly, we're a bit more cautious. If you look around the world, growth has really slowed in Europe, in Asia, and that's beginning to bleed over into the US, coupled with a lot of the trade tensions that are in the news so much. Real concerns that the state of manufacturing worldwide is slowing down. And so we're more concerned that we're going to see a recession in the early part of 2020. Don't expect it to be very severe or last very long, but that's really what's driving rates down as we've seen in the last several months.
Yeah, and certainly that would mean not such a positive outlook for housing, right?
Well, you know, the mortgage market is always two sides. We've seen refinance activity in the second quarter of this year up 43% relative to where we were last year in the second quarter. Purchase market's up about 6%. So lower rates definitely benefit borrowers. The question is, if we get into a recession, the unemployment rate starts to rise, do people get worried and do potential buyers pull back? So that's going to be the downside for the mortgage market.
So let's shift gears just a little bit. I know we have our annual convention coming up in October, and you'll be a big presence at the convention. What will you exactly be presenting?
So I think the news we'll have by then is that the Fed will have cut rates at least once. It could happen as early as the end of July, might happen in September, but we certainly expect them to cut rates once in the third quarter, probably once in the fourth quarter, and then again in early 2020, particularly if these fears of recession really come to pass. So that's going to keep rates lower. We think for full year 2019, 30-year mortgage rates will be about 4% on average. Really, really very positive for potential buyers and for potential refinance borrowers.
Great. Well, thanks so much for stopping by, and we'll be sure to have you back as the third quarter comes to a close.
Thanks, Rob.
This is Mortgage News Network.